by Gary McFarlane Last, updated February 28, 2018. The U.S. Securities and Exchange Commission (SEC) has ratcheted up intervention in the booming initial coin offering space by issuing a flurry of subpoenas to promoters and their advisors. According to the Wall Street Journal, scores of subpoenas have been issued in the most concerted effort to date to safeguard investors in an area lacking in regulation. The news indicates that the SEC is making good on addressing its concerns about the Wild West nature of the new fundraising approach that has become a favorite vehicle for blockchain projects. ICO listings and research site Token Data estimates that $1.6 billion has already been raised in ICOs so far this year, suggesting an acceleration in the funds being raised from retail investors and increasingly mainstream venture capital firms too. Last year, $6.5 billion was amassed in crowd sales. EWN reported earlier this week that around half of 2017's ICO projects failed, with investors losing $300 million. In its story today, the Wall Street Journal did not provide a source at the SEC. The SEC has become increasingly aggressive in recent weeks regarding ICOs by intervening to close those it accuses of selling securities without complying with the necessary regulations, or worse, accusing some of being scams. In the SEC's view, most ICOs pass the Howey test used to determine whether an instrument is a security. Aris Bank, which was reported to have pulled in $600 million from investors, was closed by the SEC at the end of January. In December, the crowd sale of restaurant review at Munchie was halted following SEC intervention. Gary is a cryptocurrency analyst at Interactive Investor, the UK's second-largest stockbroker. He has been writing professionally about cryptocurrency since 2013, when he initiated Bitcoin coverage at Money Observer, one of the UK's most respected investment magazines. Gary writes for EWN in a personal capacity, and his contributions should not be taken as investment advice.